In today's video, we're going to discuss how Macy's huge move is boosting our passive income portfolio. Okay, the dividends that I earn of over 150,000 per year here at this channel don't come just from dividends. They also come from options. I sell options on things. And again, Macy's is going crazy right now, so the volatility is crazy on Macy's. I follow Macy's because it's a dividend stock, and I also own some other retail exposure in the portfolio. So we're going to talk about how this is benefiting the portfolio. So again, we earn over 150,000 per year in dividends, and my performance shows that I'm up 28% for the year. Okay, and we're up 2,000 today, by the way. And the market's when E-Trade goes past midnight, 12 o'clock, then you don't see the day's gains. Plus, I also took a gain in Riv today. I sold Riv. And this is just old wash sale losses showing. So brokerage 28%, the S&P is up 20%. So we're beating the S&P. And this performance, we're getting it from using some margin. So for every $1 you put in your account, you get $4 of purchasing power. Okay. So I'm using margin to get ahead, and that's how I get the dividends and performance that you're seeing. If you're interested in doing the same, email me for my e-guides at aikentod48@gmail.com. Okay, so the benefits that we're seeing in the portfolio, the pin action off of the Macy's move and the volatility from that is from Kohl's. Okay, that's where we're seeing our benefits. So if we go to our positions, we'll see in here that Kohl's, KSS, again, we can't see the day's gains or losses, okay? But we had a big day in Kohl's. Right here, I sell options on Kohl's, okay? So Kohl's, it shows that I'm down $268. You guys have to be aware that a lot of these options I'm up on. If you do the math on these, like Kohl's, $675 is what I received, so $700, okay, for Kohl's. And Kohl's, you just take the strike price of $30 minus $7, and you get about $23, okay? Because, again, $675. So, you just minus the strike price. You go $30 minus $675, and that's the true stock price. So if you go to the website, if you go to the snapshot of Kohl's, you'll see that it's above 26 a share. And we're going to get into that in 1 second. But it also knocked down my margin. That $700 roughly that I received in Kohl's, KSS, it knocked down my margin by $700. So even though I pay low interest on my margin debt, 6% roughly, because I negotiated it down twice, and many of the clients who bought my e-guides have negotiated theirs down as well, it still helps paying it down as much as possible. So I sell these options. And I have 10 reasons, basically, and I'll make them brief, for doing this with Kohl's. The first reason was, I already told you, I lower my margin balance when I sell the option on Kohl's. Also, Kohl's is a low share price, okay? So the share price for Kohl's is $30 where I'm putting my strike price. This means that my assignment is only for $3,000, 30 a share, okay? 30 a share means that my available withdrawal stays high. My available withdrawal of 231. I like to keep this number high, okay? My market value is 475, but my available withdrawal, I keep this high because that's how I live the FIRE lifestyle. Living out of my brokerage account, you have to be able to withstand over 30% corrections in the market and withdraw freely from your brokerage account. Even if you're not using margin like I use, you still need to be aware of this available withdrawal number. And many things affect this, like stock movements and also maintenance, which is in my volume 3 margin e-guide. Okay, so that's another reason why I like Kohl's. I'll throw it out there. It had low maintenance. Okay, so I also believe it's in the S&P, but I'll double check that. So it's high quality. I'm not going to put too much emphasis on the fundamentals of Kohl's because at this channel we just collect dividends. Okay, Kohl's has a 7% dividend. Here we go, 26 a share. And it has a 7.5% dividend. So that's what we're chasing here at this channel is yield. And obviously I want assignment for Kohl's so I can get that dividend yield. But for right now, I'm controlling it without owning it. And that's how I lower my margin debt. Okay, it's low maintenance. Again, it has high dividends if assigned. Okay, I lowered my cost basis. I lowered my risk. The current price for Kohl's is 26 a share. My cost basis is lower than that. So I'm controlling Kohl's at a much cheaper price than the market price. So I've lowered my risk there. Okay, just factor, again, just subtract the premium from the strike price. Okay, and if you need help playing options, I have an option e-guide coming out soon. I'm still trying to write that, okay? So here's a standard textbook chart of Kohl's, it looks like, okay? It broke above the 200-day moving average. Macy's did the same. Their charts look almost identical. So a big breakout here. And the next resistance is 30. If you need help understanding these charts, that's in my volume 2 e-guide. So we could make it to 30 before we reach resistance. And that's also a Bollinger Band squeeze. This is a classic C pattern if you use ABCD charting. So this is just very positive. We've been consolidating in the 20s for a long time, and interest rates are starting to fall, presumably. So this is good for the consumer. So that has a bullish tailwind behind it, the macro picture for Kohl's, and consumer discretionary. Also, I needed consumer discretionary because I was lacking in that sector for my portfolio. I like to match my portfolio to the indexes, as you know, at this channel. Really quickly, look at this chart. It could be breaking above the 200 for good, because here it broke above the 200 and failed, and same here, but the moving averages were sloping downward and were wide, they were far apart. Here, they're starting to go sideways and are getting closer together. So this could be a historical multi-year move in Kohl's and retail stocks forming. Okay, I want to buy some RETL, but I'm not sure about the leverage on that. But look at the lows here, 2020 lows, 2008 lows, and it merged with, I want to say Sephora. And Kohl's, they generate a lot of cash. So this looks like a really good buy. And again, a lot of retail stocks look the same. And I needed this exposure. I have Kohl's to get the consumer discretionary sector exposure in my portfolio. My total index portfolio is basically in Cornerstone and Defiance. Okay, that's where I put all my portfolio in. This 475,000, it's in Cornerstone. But I needed some specific diversification. Now, I like to take these stocks. If I have a Devon, which is energy, or SLG, which is real estate, those are two key sectors of the S&P, and Kohl's is another key sector that's consumer cyclical. So that's how I'm controlling consumer cyclicals and getting diversification and lowering my margin, okay? And again, I get most of my total diversified exposure from Cornerstone, which... if you're wondering, it's a 5-star fund and it beats the indexes here. You just have to factor back in the dividends and drips and play this fund properly around its rights offerings, which is in my volume 4 e-guide. When you buy all of my e-guides, you get free access to Discord, where I alert you of the Cornerstone rights offering. Okay, we have about 500 members here, almost 600, and you can follow my portfolio on Discord when I'm not making videos on YouTube. And again, you can get the rights offering for Cornerstone, which is how you really level up your account. Okay, you get the special drip in Cornerstone. You get the 21% dividend it has, and you get days gains potential, which we're up a few thousand in Cornerstone today. But you also get the rights offering every year. Many closed-end funds have rights offerings. I sold RIV today because it was up a little bit for us, and I'm just trying to... I have bigger fish to fry with these Yieldmax names. I just bought Appley, as you know from my past videos. But I'm keeping some GOF on. I'm building my position back in GOF. I have about 4,000 in it. Okay, and the ex-dividend date's coming up in that. So that's a closed-end fund, and you just have to be aware of the rights offerings in closed-end funds. Also, when you buy my e-guide, you get my phone number with the Discord chat room. So if you need help understanding options and how I sell these options to lower my margin, you can call me anytime. Current clients, for everyone who've bought my e-guides and have my number, you guys can always call me and talk about these options. I'm trying to finish this e-guide on options. But in the meantime, you're always welcome to call me, of course, and talk about these options. So I prefer to sell options on indexes, but again, sometimes you want to do stocks, but I don't like doing stocks at this channel because they have a lot of risk, stock-specific risk. I don't like that, and if I'm gonna sell options, I'm gonna do it on low share price names, again, like a Kohl's, but I'm gonna have the dividend and the premiums offset the risk for me. So, I think I've given you guys, and also, by the way, these options give you long exposure. I was up today in Kohl's, and many of these options can move for you on a given day. And that's how when I get the thousands per day that I'm earning, and capital gains of this channel in addition to the dividends. I'm usually I do it in parts. I have my cornerstone, which gives me a few thousand a day. I have the rest of these funds, which give a thousand or two. And then I have the options, which can give about $1,000 a day on a good day. So that's how I construct my earnings on a given day, in addition to the 150,000 in dividends that we earn per year. So if you need help doing what I'm doing, again, email me for my e-guides at aikentodd48@gmail.com. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.